Perfect. Now we can go ahead and get started. So first we're going to start out with the recap. Don't forget, please pull up the interactive link that is in the Zoom chat that is there right in chat, right at the bottom it should be. All right. Let me go ahead and pull up the list really quick of the last Zoom that we had, first day of boot camp. And then we're going to go ahead and get started. We got some special guests that will be giving out some fire tips as well. Today is going to be going over charting. And I know a lot of you guys are expecting that. All right. Perfect. And I'm gonna run through this list. This is the 20 main things that we went over for last Zoom. So it'll be very quick. First, trade the stocks that move. Use Finoviz, FINNVIZ.com to find stocks in sectors with momentum. 2, make sure you check monthly and weekly candles so that you can get a gauge to typical price moves before choosing strikes. 3, it'll be price. Pick the strike prices that fit the stock's average move. So avoid unrealistic strike prices. So if the stock is at $100, you're not choosing a $150 strike a week away. It doesn't make sense. 4, don't force trades on expensive or slow-moving stocks. AT&T, at least just from my experience, moves slow. I'm not going to buy it. I'm not going to expect it to move quickly within a week unless there's some news or a catalyst. Right? 5, understand how the company makes money to predict price reaction to news. So, for example, Netflix, if they raise subscriptions $1 and they have 1 million customers that pay them monthly, they make $12 million extra each year. So just understanding how the company makes money, you'll be able to capitalize from. 6, seasonality matters. So understanding what seasonality is. Some stocks heat up only in certain periods, banks, retail, travel. 7, during peak volatility, the first 50 minutes, that's at least for me, in the last hour are the most volatile. You get the most volume, the most people are buying in the mornings and towards the end of the day. Options, in order for you to capitalize, you need movement. And it's easier to buy and sell in the mornings and towards the end of the day. Number 8, you don't need to be in the market all day, right? Focus on prime volatility windows. So that first 50 minutes, the last hour, prime times. Set your max stop loss percent before actually taking the trade. Don't go in without a plan so that you can protect your capital. If you spend $100, don't let it go to $1 and then you can't even sell the $1. Doesn't make sense. All right. Manage position size wisely. Avoid chasing losses by doubling down recklessly. What do I mean? Let's say a trade you're in, someone probably said, hey, double down if it's not working out so that when it goes in your favor, you can make up for the loss plus more. But if you do that on losing trades over and over, you're just adding on to a losing trade. The only time that you would add on to a trade is if it is starting to go in that direction. So pretend like you don't even have the first trade. And if it makes sense to get into a new trade, then you can go ahead and add on a trade. But if you're just buying in another trade, another contract, just because it's down 60%, it doesn't make sense. All right. 11, know your max loss percent upfront to keep your trades disciplined and safe. Right. So understand how you are trading. Come in with a plan. Take profits smartly. Compounding gains over and over. That 30%, 40, 50%, those add up over time. It's like a snowball effect. The 1-minute chart, this is just from experience. It's much easier to catch the move very quickly compared to a bigger time frame if I trade on the 10-minute, 15, 20, 30-minute. So when I'm trading and I'm scalping, for example, I'm on the 1 minute compared to the 10, 15, or the 4 hour, right? On my charts, I use something called Rippser's Clouds. I use it, and I'm using the clouds as a support and a resistance. So using trends and understanding if it breaks those trends, that it's changing direction. Freaky Fridays and understanding high risk and high reward. Trade smaller size or skip it if you can't manage taking your profits quickly, right? Let's see. 16, know what drives a stock. For example, earnings, subscriptions for like Netflix, AI, when they add AI services, product launches, mergers, right? If a company is buying another company. 17, volume and volatility. Of course, peak morning and last hour, prime time to trade. 18, choose the strikes with good open interest and volume so that it's easier for you to enter and exit your trade. Think of it like eBay. If there's no one else buying it and you put it on there, it's not going to sell. You'll end up keep lowering the price just for you to get it to sell. So same concept. Make sure that there's volume, other people buying it. What does news give us? Volume, attention. Right? 19, mindset is key. Have clear rules, risk management, and no chasing losses. Right? 20, the last one. As you go through your trading journey, everyone's journey is going to be different. Have someone that you can trade with so that it's going to be easier for you to understand and you can both interpret it. Two heads are always going to be better than one, right? That was at least the first boot camp that we went over, the first class yesterday. Today it's going to be on charting specifically, right? I do have a few special guests that can add on to what we're going to be going over today as well. I'm going to start with the basics and then we're going to start getting more in depth. For me, I'm more of a momentum trader. I love breakouts when prices going crazy off of maybe news, a catalyst. It's much easier. Or maybe it bounced off of support, broke through a resistance. I'm using that to capitalize from, right? Now remember, right, with options, we need movement. I'm sure most of you guys that are on here already knew what I was going to go to first. So we need movement if we're going to jump into a trade. No matter what, it needs to be able to move. If I see within a week, the stock only moves $1, $2, and the stock is at 80, 100, 200 bucks, I can't capitalize from that. The stock that you choose for your watch list, for example, the one that chosen stock that you can always know how it's moving, make sure there's at least 3 opportunities within a week that you can take on that stock. So what do I mean? There's upside, there's downside, there's movement or continuation the whole week. But it's not just moving up $1, down 50 cents, and that's it. Tesla, a very good example. Don't forget also, yesterday, Trey was going over, you can use the weekly candles to understand how much movement a stock can go. This right here that we're using, this app is TradingView. Everyone on here should have TradingView or at least Thinkorswim. Thinkorswim free, TradingView you pay monthly, depending on what you need on your charts. The more you're paying, the more you can add on, the more alerts, the more strategies that you can add on as well, right? Let me go to my normal setup really quick. While I'm trading, I normally have 4 charts up so that I understand what's going on in the market. So I always have SPY in the top right corner, so I know where most of the market is moving, right? Bottom right corner, I'll always have NVIDIA. NVIDIA is the main stock that definitely moves the market. There's times where I can use NVIDIA as a tool or a gauge to see where the market is moving or what direction or condition the market is in. I have always tests on the top left corner, and then this bottom left corner rotates. The reason I have these, or at least this setup, so that I have an understanding on the sentiment of the market and what's going on. MSTR is crypto. MSTR, you buy Bitcoin. So I have to know what's going on with Bitcoin to be able to trade MSTR. Right. So yesterday we also went over on candles. A really quick question. Can everyone write it in the Zoom chat? Where does a green candle start? Everyone just really quickly, where does a green candle start? Really quickly, where does a green candle start?
At the bottom.
The bottom.
Everyone. It was like 30
At the
something.
bottom.
It is at the bottom.
Everyone else?
It's at the bottom.
It's at the
I have
top.
no clue.
You want us to tell you or you want us to write it?
I'm so confused right now.
Nico,
Yeah.
you want us to tell you verbally or write it in the chat?
No, just write it in chat.
Okay.
Perfect, right? This man drew. So green candle starts at the very bottom. So when the candle opens, starts at the very bottom. I'm gonna open up only one chart really quickly for us. All right, so we have our one candle right here. Green candle start at the bottom. The wick shows where price has reached. On these candles, they're on the 1 minute. So since I'm trading on the 1 minute, this is a candle that has elapsed 1 minute for this full candle to form. So we start at the bottom, price reached all the way towards the top. On TradingView in the very top left corner, when you're hovering over your candles, it will show the open, the high, the low, and the close. That is important. Use that. The reason why that is important, it shows or tells you the story of how the price of the stock is moving. So if we know our green candle starts at the very bottom, at some point within that 1 minute, the high of that candle was 328.07 and the low was 327.52. So price went from 327.52 and then reached all the way to 328.07. Now within that same 1 minute, it finally closed at 327.83. So the price went up, started at the very bottom, went up, came down, and then moved on to the next minute. So as price is going, we're understanding what the story that price is doing, right? Who's in control in that tug of war? Are the buyers in control? Are the sellers in control? So anytime that you're trading and you're watching the charts, for example, right? Want to understand who is in control so that you understand direction. Does that make sense, everyone?
Yes.
Perfect, perfect. All right, now, when it comes to charts, there's different time frames, of course, that we can trade from. 1 minute, 5 minute, 15 minute, 4 hour, so bigger time frames, right? The bigger the time frame that you're trading from, the longer the term that you're looking for that direction. So what do I mean? Let's say if you're looking at a daily, 1 day. So each candle, instead of it being 1 minute, oh, sorry. Let me change it to, these lines are all from me trading on the 1 minute. My bad. Let's see what I can do. One second, yo. I'm normally testing out all right. Let's make it turn. All right, perfect. Anytime that we have charts up, right? We need to understand direction and we need to understand areas where price struggles to break above and below. So these are key price points or areas that maybe the buyers and sellers, they love, right? These are areas that are very important. And as time goes by, if price reaches those areas again, it may struggle to get past, it may consolidate, but it may end up becoming another support or resistance again, right? So right now we're looking at Tesla, for example. Let's go on the daily. All right. Perfect. So as we can see here, each candle, don't forget, is on the daily, right? It took a full day for each candle to form. Green candle, once again, starts at the very bottom. Price at some point within this day reached all the way to the highest, 335. We got that, which was nice. And then finally close lower than the highest point that it reached. It's painting a picture. It's writing a story, right? As price reaches certain areas, let me go ahead and have this, right? Let me go ahead and set this. Can anyone let me know what this is right here that we're putting at the very bottom?
Support.
A support line.
Write it in the chat. Write it in the chat.
Sorry.
Everyone got it? Let's see. Let's see. Yes, we have our support, right? Don't forget, I'm gonna go through the basics and the simple. Most of you guys already know the basics. So I'm just gonna go, I'm flying through this part and then we're gonna go ahead and get to the nitty gritty. Support. I learned a term from a good friend of mine, Pam. She calls the support the floor. So the floor right here. And then above, what is the top called? I know everyone here should know this one already. Really quick, put in a Zoom chat, really quick, really quick. The roof, I like it. Our resistance, right? Very nice. So we have our support, our floor, and then we have our resistance, our highest point, right? Areas where price struggled to break above. I actually like this as my resistance right here. All right, perfect. Right? So we have a support and we have a resistance, an area where price struggled to break below and price struggled to continue to break above. These are key areas that we need to remember. Now, anytime that I'm trading, so let's say I'm going all the way onto the 1 minute, right? We know what our highest point is, but our most important thing that we need to know is where is price right now? What was the next highest point that price reached that we need to break? So let's say if I'm looking at this right here, actually, let me go ahead and switch to a 15 to make it easier for us. Beautiful. All right, so we're gonna put our nice, actual, real resistance that we have right here. All right, so this is our resistance, right? Price reached at this point all the way here, struggled to break above at one point, and then dropped. So it reached all the way to this area and then dropped significantly, right? This is important. This area is important. So as we're trading, as time is going, we need to remember, hey, price struggled to get above this area. The buyers couldn't get above this. The sellers took over, all right? Now we get back to the same area. Where are we? That same exact price that price struggled to get above before. What did price do again? We're at our resistance, right? We're sitting a little bit below our resistance. So price would need to get above this 334, almost 335 area in order for us to know that price can continue. If it cannot, we know what? What do we know, guys? Anyone have an idea? If price cannot get above our resistance that we have right there. Any idea at all?
I'm gonna give y'all a hint.
Go ahead.
If at support, you know, it bounces or goes up, what do you think it does at resistance?
I like it, Alex. It can reject. We have two scenarios that can occur, right? So far, our last time that we were in this area, it rejected. The last time we got in this area, it consolidated, and then a big drop. So why is this area important? It has occurred before that it struggled to get above this area more than once, I'm sure as well. If I scroll back, history likes to repeat itself. Once again, that same area price struggled to get above. Of course, there's been a time where price finally has broke above, but it drops right through. Now, price has gotten right back to that same area and struggling to get above. So what can potentially happen is this, where price rejects, right? This, where price was struggling to get past our resistance, and then we get a break right above that area. All right. In this case, hopefully it's not this, but in this case, so far, price is staying within that area, staying close within this area. We want to see if price honestly goes below this 321. This would be our next support. So we got our support here and our resistance right here. So as we move closer into our candles and our times, we have our supports and our resistance. They continue to be in the same areas. So now when I'm trading on the 1 minute, for example, I have key areas I need to look out for. Key price levels that I need to make sure are always on my mind, where if price gets to this area, can break. Or is it a possibility where, hey, let me take my profits if I was in calls, or take off most of whatever's on my trade so that I'm not risking too much if it does reject once again. Does that make sense, everyone?
Yes.
Everyone else, everyone else.
Can I ask a question?
Of course.
So how did you know to market at 321? Is it because it was in a consolidated area?
So 321, I'm going to go back to it. Another significant area that price struggled to get past and then finally broke above.
Oh, okay, gotcha.
So over and over, we're going to have areas where price struggles to break above and below. So we're going to continue to always have a support and resistance everywhere. Anytime that we're trading, if price consolidates, it's much easier to find your support and resistance. If price is on a breakout, that means it's breaking past a resistance or breaking past or breaking below a support if it's falling like a knife. All right.
Okay.
So for me, since I'm only trading off of the 1 minute, it's a little easier for me to find areas where price struggle to get above and below quicker than someone that's trading on a 15 or a 4 hour, because I got a shorter time frame. I'm seeing candles as they develop and get close to those areas. I'm seeing if it can actually break through or get past. So at least for me, I'm normally always on the 1 minute as I'm trading throughout the day.
Thank
Right.
you.
Any other questions right now, guys? Am I going too quick? Is it making sense? Everyone else, there's like 30 of you. All right. What makes this occur? Things like this occur. These breakouts. Now remember the word volume. Volume will always be significant when you are trading, when it comes to the contracts you're choosing, when it comes to the stock that you're looking at. If there's no volume, there's no possibility for breakouts or large movement. When we get large movement, that means there's a tension. Anytime that I'm trading Tesla, I'm always looking to see what the overall sentiment of the market is. Can it actually break out or break down? So is there a tension enough to where the stock maybe got a catalyst, maybe Elon doing something crazy on Twitter again, maybe he's beefing with the president, whatever it is, right? There's a catalyst that can move the stock. When price reaches a support or reaches a resistance, it gives it a reason for it to break through your support, or it gives it a reason to break through your resistance. Every trader on here needs to understand that the fundamentals and the technicals, they go hand in hand, right? Don't miss out on one and just only focus on the other. You need to have both under your belt and understand what price is doing. Price action. Everyone go ahead and write this down. Don't forget, I was saying that we have a few terms that you do need to make sure you do a lot more research on. 1, 2, 3 zooms is not going to be enough for you to fully understand and be able to apply it. So price action, go ahead and write that in big, bold letters. That's understanding how price is actually moving, who's in control, buyers and sellers, what direction price is going. When it comes to like those dojis, like the tug of war, like we were going over, who is actually in control. Consolidation, understanding where price can actually go. All right, any questions, guys? Please don't hesitate to ask. Okay, perfect. Big body green candles. I love them words. Why? When it comes to options, well, and of course those that love puts, big body red candles or falling knives. When price is moving very quickly, this is what we're looking for. We don't make money off of these. When you're in a naked call, a naked put, when you're buying a call, you click buy. When you're buying a put, we're not making money off of this. We're making money off direction. So understanding when price can break out, right? Anytime that you're in your trades, price action will be key to understand how long you're keeping your trade as well. If I'm getting big body green candles like this, our contracts, they're gaining value quickly. I know a lot of you guys love 0 DTEs. You guys love them Lotto Fridays on a Monday, Tuesday, Wednesday, Thursday, and Friday. Trading SPX that expires the same day. In order for you to capitalize, even if you're trading contracts that expire at the end of the week, in order for you to capitalize on those, watching price is going to be these candles or this movement right here. This is how you capitalize on your contracts, not the sideways movement. Let's say, for example, I was in a trade, right? Price started slowing down, right? If I was at 100% here, let's say my trade was at 100%. Then I start getting price movement right here, price action like this. So my 100% trade goes from 100, 130, 150, 160, depending on my strike price, right? 160%. Now, the moment this starts occurring, this candle right here, my 160% that I have on my trade is starting to lose value very quickly. Sell into strength. I'll say it again, sell into strength as you get these big body green candles. This is where you can capitalize on your trades. This is for calls. Puts, sell into strength, same thing. Those falling knives, when you see prices dropping significant, sell into strength versus selling while price is consolidating or slowing down. Your contracts make the most in value when they look like they can make it to your strike price or go past it. So the value of your contracts gain the most as it gets closer to your strike price. The quicker it starts to get to your strike price, the more you make in a short period of time. So candles like this is one where we're making the most within our contracts. Candles like this on puts, you're making the most. Don't wait for the sideways slow movement to start deciding, dang, should I sell? Should I sell? When you're up 100, 200, 50, 60%. So selling into strength will be key. I'm going to tell you something that you're going to hate. Everyone listening? Everyone listening?
Yes, listening.
Yes.
I'm gonna tell you something you're gonna hate, I promise. So when you're in a trade and you're up and you take your profits and you're like, dang, it could go up more. You're going to miss out on some profits. You're going to miss out on a continuation, right? Understanding that is going to be very key for you to be able to survive in the market in order for you to trade for another day. If you don't keep that mindset and you see movement or price action like this, let's say you jump into a trade right here, price breaks above your resistance, right? We get a breakout, and then you're deciding, hey, should I continue? Should I continue holding? Should I continue holding? Should I continue holding as price is pulling back? Now, being able to capitalize is being able to be comfortable with selling when price is doing this, when price is doing this, when price is doing this, when price is running up in a short period of time versus waiting for these, right? If you would have held the same contract and price went all the way up here, and then it came down and went all the way back to that same area. So let's say if we bought our trade right here. So this is based off just watching price action, right? So let's say our contract was at 100% here. Do you think if that same contract, if I'm holding it, even though price got back to that same area, the value of my contract would be the same? No. Even though price reached the same area, that does not give it the same value that it was when it was 5, 10, 15 minutes ago at that same price. So make sure you're capitalizing on the big moves instead of waiting to see if price can continue to break. So let's say it got to our resistance, right? And then it struggled, continued to struggle, and didn't break above. We had this resistance set from all the way from back here when it was in this area the last time, right? So price consolidated right here, and then from there just gradually started coming down. So make sure you're capitalizing on the breakouts, the nice push. Price action will tell you what's going on. When those big spikes or news comes out, maybe Trump said something and then a big spike, you're on the candle, you're looking at the candles like, what was that? Sell while that is happening. Versus watching it occur, watching the run up on your contract, and then seeing it come down, and then come down more, and then go down more. Does that make sense, everyone?
Yes. Yeah, it
Everyone
makes
else?
sense.
Is anyone struggling with that? Selling,
Holding.
holding too long, greed, not knowing when to sell. I know that's one of the main things most traders have an issue with. So I know y'all silent, but not trying to say it. So most traders do have a difficulty with just taking profit or saying, hey, it can go higher. Let me hold this because it can go higher. I know I'm up 100%. I know I'm up 50%, but it can go higher. If you see on our charts right here, if we see that we have a resistance, price is struggling to break above, why continue to hold? No. All right. So this will at least help with making sure that you're taking profits, especially when we get our spikes, our run-ups. You should really be just selling into strength. But if you want to be a little bit greedy, you can wait for price to start consolidating in an area so that you can see, hey, let me start deciding if I need to go ahead and take my profits before I wait too long, because price can consolidate for half the day. An hour, 2 hours, 30 minutes. We've seen it where it consolidated the whole day and then finally ran up at the end of the day. So just how long can your contract be held before it loses its value, right? Does everyone understand price action? Understanding how to read the candles? Speak up. Let me know. Let me know.
So even if you see an uptrend, but it's not a bunch of big green candles, you're not really sold on it.
Not really. Unless there's a catalyst and price can actually continue to go, and the others in that sector, remember sector rotation, right?
Yeah.
If the others in that sector are moving as well, then I'll be more confident. But if it's struggling to continue, or let's say if I see pullbacks where price is really like too much, let me just take my money. Why continue to hold to risk it? Right? Why continue to hold and potentially lose out on profits on the trade? I know you've all seen it time in and time again where you're up on a trade, it pulls back, and then now you're down 10% on the trade after being up 50%, 40, 20, 30, 100%. Then you're deciding, dang, should I sell now? The opportunity is you saw a profit, right? If you saw $100 on the ground, are you honestly going to pick it up, or are you just going to walk past? Let me see if I see another 100 on the ground. Let me see if I see another 50 on the ground. Somebody gonna come and pick that 100 up. Making sure that the mindset is there when you're trading is very important. Going in with a plan is very important. If you have a target, let's say if you take trades and your profit is 30%, hey, I'm gonna take my profits at 30%. How can you lose? Right? If you have a stop loss that's tighter than your stop, then your take profit, let's say it's 20%. How can you lose if you continue to have more opportunities? Don't get in the habit of letting your trade, treating it like a Friday, letting it go to zero over and over. You're like, man, I feel defeated. They got me on this one. Let me just let it go. There's no point. That's just for everyone. Ben 10, you got a question?
Yes, and it's not necessarily off topic, but I accidentally made my TradingView white, and I'm trying to get back to how you have your screen.
Oh,
That
dark
dark.
mode.
Yes.
So here, I think it's more settings. Actually, no, it's under the actual account itself. So you got to go to the actual full settings, not the chart settings. Let me make sure. Yeah. Because of the dark mode and light mode. So what are you on, your computer, laptop?
Both.
Yeah, you would go into the menu on TradingView. So you're not in charts, but in the actual menu of TradingView, and you'll be able to change it.
Oh, there it is. Okay. God damn it. Thank you.
No doubt.
I was
So
stressed.
everyone at least understands price action. Our entries would be a test on a support, right? For me, since I love everyone, I said last time, I love only buying calls. I love upside. Sooner or later, as long as it's a good company, it will go up. So when stocks drop, when they go down, like, well, I don't know about trade desk. It's gonna go up some, but I don't know about a long term right now for that one. So with trade desk, for example, it dropped significantly, right? 39% one day. Boom. What's gonna happen? People will look at it as if it's on sale, it's on discount, it's on clearance, right? There's times where price has dropped and dropped and dropped, but we still see some movement. Honestly, think it might go to like 52, 51, and then probably bounce. But so far we got support here, right? It went to this 53, 53.19 as our support, and then bounced from there. Now price, let's see if we can go right back to that support or break through. Same concept. If price holds here, we can possibly see another bounce. So you can capitalize on the upside. Now, here's the thing. I'm going to say this, right? Let's say we see price drops from a certain area, right? It goes it drops crazy. Anytime that for me, when I'm choosing a call, so let's say this area, for example, this is on the 1 minute. So let's say if I'm trying to choose my strike price, so price dropped from 55.63 and went all the way down to 54.11, right? If I'm going to choose my strike price from this, I'm not going to choose a strike price that is above this area, because what if it doesn't go above? So choosing a strike price at the next area, at least halfway, is much smarter compared to choosing it to get all the way back to where it was before or higher. So now if I choose, let's say around here, right? Let's say if I choose, if there's a 54.50 for the strike. Now when price breaks above, if it ends up going back into the same area that it consolidated, now my contract's in the money. Now my contract within that time can go far in the money. Let's say if it goes back up higher than where it was consolidating, now it's going deep in the money. So this is important when I'm choosing my strike price. I'm not going to choose a $60 strike price for this, right? For trade desk. I can choose, let's say, a 55, and if price breaks back to where it was before, I'm still good now. It's in the money. Does that make sense, everyone? This is with entries. This is with choosing your entries when price bounces off of support. Oh yeah, most of you guys on Zoom, my bad, I forgot. That makes sense, that makes sense.
You're
Yeah, question.
Yes, go ahead.
When you are drawing your lines for resistance and support, right? Are you drawing your line at just the general area? So say it comes down to random stock goes to like 100, 140, and then the 150, and then 143. Are you just saying, okay, if it gets to that area, or are you looking like for it to draw your line like it has to hit this number right here for it to be my support?
So what do you mean? Are you saying, because remember,
So
we're basing our support off of where price has already reached before. So this is our support right now.
okay, so you drew it just off that general area.
Yes.
Okay.
For this one, we see that it bounced from here and had a nice run up.
Okay. Like how I've seen some people say like, okay, I need to see it do like 4 touches to this line.
3 taps,
Yep.
4. So this right here, we see price consolidated, right? So this would be a perfect example of a resistance, right? It struggled to get past this area. But I'm sure I would have to go all the way to a bigger time frame, 53.22, 53.22. Look,
Oh,
I'm nasty. Well, this shit crazy.
wrong Zoom.
Right? So price before loved this area. It's tapped in this area before 3 times back to back. And then over here did the same thing. This was a nice consolidation and then broke out from the same area. This is that same line that we have from all the way over here. Does that make sense?
Gotcha. Yep.
So I'm using price the last time it was in this area as a support to determine where price can go. Of course, it can go lower, but so far it has tested that area.
Gotcha. Okay.
Everyone, does that make sense? Everyone still following along?
yes.
Perfect. That's how, yeah, I know how you play earnings. So when it gets to the support, for example, right? Let me go back on our 1 minute. Someone asks, does it have to have a catalyst once it gets there? No. It doesn't have to have a catalyst in order for it to be bought back up. So this price was just significant from previously before. So other buyers looked at that same area as well, right? And saw that this was an opportunity. And now people started chasing it. Oh, That was a nice area, started chasing it. Price got back to the same area where it was. I think it was pre-market, right after the earnings got reported, and got right back to that same area, and then that's our resistance. Price struggled to break above. So now we need to keep this price in mind. If price gets back around that 55.73, around this area, can price finally break above, or will it reject once again? So when I'm choosing my strike price, let's say price gets over here, right? It goes all the way back up, we missed it, and it gets all the way back here, and I'm choosing my strike price. We want to see, can price break above? Anytime that I'm looking for my entries, what I'll normally do is this. I'll always look to see if price has a full candle above the resistance. So this is based on our entry on the 1 minute. It could be on the 15, whatever time frame. So price is above my resistance. The trend is, it's easier. I'll say this also, it's easier on a 15 or a higher time frame when it's above this resistance, because these are only 1 minute candles. This is only 4 minutes where price was above our resistance and then dropped right back down. So let's say if I was on a 10 or 15 minute, price didn't fully develop a full candle above. Price went up, then dropped. Got back to that area, dropped. Got back to that area, dropped. Got back, and once again over and over. So we didn't have a full candle with a continuation above this. So this is our full resistance. We're worried about this area. Can price get above this area? Now this false breakout, right? Price started to run up. We got to this area. Price couldn't continue. The buyers couldn't take control. We got a doji, an indecision. I call these like tug of war. The buyers and the sellers are playing tug of war. In this case, the sellers won. Right? So we couldn't get a full trend. So if I were to enter, I would wait for price to continue the trend above our resistance to decide to enter calls into the straight. In this case, puts right away. Price tested in the area again, couldn't get above, full candle, puts once again, puts once again. Does that make sense, everyone? Is
Hey,
it clear?
Yes.
Is it clear? I heard the
Yes.
yeah in the background. Somebody was gonna say something? I heard an A. Or that was a aha.
that was me, that was me, that was me. Yo, I know people said that they know when the candle starts and when it ends and all that stuff, but can you give an example of that?
Oh
Or
yeah.
just do like a multiple choice question, see if everybody gets it right.
All right. So, dang, brother. Let's see. I mean, all I got is green here. Let's see. Let me see. Let me see. They all know this part, brother. They at least know this one. For this candle right here, we already see where did price start from here. Actually, I'll ask this. Where did price open on this candle? What is the actual price that this candle opened? The one that I have on right now, that I'm hovering over right now. Right here, right here. Anyone?
At the
Except
bottom.
Ben 10 or Perp?
53, 52.
Perfect.
You wanna pass me the host real quick?
Okay. Everyone saw how we got that 53, 52? Let me just show them real quick. Top left corner, don't forget it shows the open of the candle, the high, the low, and the close of the candle. Let me make sure you can post real quick. All right, go ahead.
It'll be quick, just wanna make sure everybody, is good to go.
And this is EC, my mentor. So when I go to ask questions,
Alright, you guys see this right, I guess? You guys see
Yeah.
the screen? Alright, hold on. Alright, so let's just focus on this candle here, this main candle here, the red candle, I guess. So pretty much you're gonna see the price on the right hand side. We're gonna do this one, this one. This one and this one. Okay, so I'm gonna do this one as blue. And do this one, oops. Green. And do this one yellow. And I guess we're gonna do this one, we'll just leave it white. Okay. So these are the prices here on the side. Can you guys see the prices on the right hand side?
yep,
Yeah.
Yeah.
Alright. So if you're looking at the prices on the right hand side, right? So where did this candle actually open? This red candle here. They're open at white, yellow, green, or blue.
Bro, what? Blue. Oh, blue. Sorry.
Okay. Anybody else? You guys can type in the chat if you want.
type in chat if you got an answer. Where do you think price started? I like this one. E, that's better.
I hope you guys are not following the people that are saying it the most. Alright, so the correct answer is green for sure. So this candle started at green. So this is the first step that it took. You don't know if it went up or if it went down because we're not live right now. First, right? But it started at green. Okay. Now, where did the candle end? Green, blue, yellow, white. Alright, cool, cool, cool. Yep, yellow it is. What was the high of the candle? This is pretty easy. What color was the high of the candle? Okay.
Blue.
And okay, and obviously the low was white, pretty much. So, right, when you look at it afterwards, it's kind of hard to know exactly which way the candle went first, right? If it started here and then it went all the way back up, it went all the way up, and then it went all the way back down. But it made these moves. So meaning that there's multiple opportunities here, right? Like Nico was saying, this is the 15-minute. I think he said you were you were trading on the 5-minute, 2-minute,
1 minute, warrior.
1 minute. Okay, so let's see how this candle looks on the 1 minute. Remember, this is 15-minute. Okay, let's do time frame. And you're doing 5 days, 1 minute, or same day, 1 minute?
Same day, 1 minute.
Same day, 1 minute. Okay, so
EC
today,
don't even look at the 1 minute.
yeah, not anymore. Yeah, it's just crazy. I fucking get dizzy. Oh, we can't even do it because it's today. So
do
let's do
2 or 3 days, I guess.
let's do 3 days. Yeah. All right. So remember, I was on the 15-minute, so it would have to be 15 candles of 1 minute, right? And that was the opening candle of that day. So let's see here. So we were over here. So we're gonna do 15. We're gonna do 15 candles. So you have starting candle, which is this one. This was the starting candle on the 1 minute. You have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. So right here, was when that 15-minute candle closed. So if we're looking at this chart, right, on the 1 minute, how many opportunities do you think we had? We had a bullish opportunity here. The beginning is a bearish opportunity, but we had a bullish opportunity here. Then we hit the high over here. And then we had a bearish opportunity over here. This is a setup here. But you see what Niiko was talking about before as far as like the resistance and the support. So we have resistance over here. We have somewhat of a resistance over here, but it's also support. Because this line right here, the green line, was what? The opening, right? Opening candle. So it finally broke the opening line, and then it started heading down to the low of day. Remember, the white was the low of day. So after it hit the low of day, which is the white one, it started climbing up again. So this is another bullish opportunity. So this is calls over here. I honestly, I know it's a different strategy. We all trade differently. But if you're looking at the chart, you have a lot of mixed emotions here, especially on the 1 minute. So you have a downtrend, downtrend, downtrend under the clouds. And then I believe finally breaks over the cloud. And then it goes bullish. And it holds bullish. And then it maintains it. Till it breaks down again under the white line, which was the starting, remember the starting, the low of the starting candle. So I just kind of wanted to break down, like, so you guys can actually know exactly how the candle looks, where it opens, where it closes, the low, bottom. If you're looking at this candle here, which is the 1 minute, just a little bit tougher. So if you're looking at this one, which is the first opening candle on the 1 minute, right? Yeah, it's thinkorswim. What do you think? How would you actually judge this first candle here on the 1 minute? This is the opening candle. How would you judge it? Would you judge it as bullish or would you judge it as bearish? I know we already see the green candle, but if this wasn't there, how would you judge this candle? The setup. You can write it in the chat. I'm here, bro, but I'm doing something real quick. I'll be right back. Give me a second. All right. Can you tell me why it's bullish? Why you think this candle's bullish? You can write it in the chat.
Tanisha said it would from the bottom.
Anybody else?
Anyone else? Anyone else? The buyer's kind of
The buyer's kind of one.
the buyer's kind of one is hilarious, but not really.
Okay, so for KB, okay, so for KB, right? So what's the difference between this candle and this candle over here? So this candle and this candle.
There's no difference really. Oh, well, I don't know. I guess that candle where you had your mouse at kind of looks like it's right where it opened. So it was like buyer.
So this, yeah, okay, cool. So I'm not trying to confuse you guys, right? This is exactly what you guys said. Yes, it wicked down and it bounced from the bottom. It did get bought up. It did have a buying momentum. When you see several wicks on candles, it's usually followed by a huge green candle unless there's some kind of news or something else happens. Now, this candle here is the same candle as this one, just backwards, pretty much. Okay, so if this one is going up, which is bullish, there's a name for these two candles. If this one is bullish, then this one will be bearish, right? This is still a green candle. This is a red candle. But if this one is bullish, this one should be bearish, right? Because it's inverted. Does that make sense or no?
That's a pin bar candle, right? Supposed to like signify a reversal or no?
This one signifies a reversal, yes. But the only reason why I'm picking this one and this one here is because it's whatever follows that candle. There's no right or wrong answer there. These two are both the same, but whatever follows this candle. This one gets followed by a green candle. This one gets followed by a red candle. And a red candle and a red candle and a red candle stepping down. But it depends on what follows this candle. Does that make sense? So I've seen this candle before, we've seen this candle before come in and you still get another green candle afterwards. Even though this is a bearish setup right here. Yes, dojis, yes. I'm trying. Let me bring it up for you guys. Give me a second, okay?
Yes, so
Give me 1 second. Why isn't this thing coming up?
everyone following along? Is it clear?
Yes.
Yes. Everyone else? Everyone else? Y'all still with us? Y'all falling asleep?
This is
Okay,
the 1 minute, right?
this is the 1 minute.
1
So
minute.
this is a
Everyone
doji.
in the chat, really quick, just put I'm still here in Zoom chat just to make sure I know you still here. Put I'm still here in the Zoom chat. All right, go ahead.
Nah, you're good, you're good. Yeah, they're both long-legged dojis pretty much. One is inverted, the other one is not. If this one would have finished a little bit more lower, like over here, then it's considered a greystone candlestick, which is pretty much bearish. But yeah, they're both long-legged dojis. It depends on what follows afterwards. So in this case, for the green one, the red one, a red candle followed by more selling pressure. On the case for this one, then obviously the price got picked up, and then you get a long green candle, and then after that, another green candle, and then it eats it back down. So there's sellers coming in, stepping back in. So it really just depends on what comes afterwards. Does that make some kind of sense or no?
Everyone? Perfect, perfect.
All right, cool. I'm just gonna try to find something else, Nico, and then I'll hand it back to you, which is something that we touched base last time. But give me a second, hold on. Let me see if I can
All of this is repetition, guys. Repetition, doing it over and over to the point where it's muscle memory. You can recognize it. It's easier. The more time you put into charting and actually watching the market, the easier it will be. What I would say is, even without actually putting money into a trade, understand what's going on in the market. So look to see back tests. Even if the market's not open, back test, practice. The more time you put into charting, the easier it will be when you're actually live trading, looking at it, especially on a Friday, 0 DTE, and the contract expires in 4 hours. Any question as you see just pulling up something for us? Any questions? Any questions? If I don't know it, he probably know it. I would ask any questions you need. Some people I know that they might be on the stage of, I don't know where I'm at. I don't know what I need to do next. I'm trading. I know the basics. I know what a call is. I know what a put is. I know when the stock is going up. I know when it's going down. But it's just when I jump into the trades, it's not clicking. As we're going, it's a journey, right? You got to connect the dots as we're going. So understanding risk management, understanding how to choose your contract, how to understand why the stock is going up, how to actually choose the right contracts to be able to capitalize. If you're choosing trades, oh, everyone should have their journal also, or at least by Monday. I'm sure there's still some back to school sales going on. Get a journal. I recommend getting something that you can write into versus it being on your phone. You get distracted too easy by just clicking buttons or you get a notification. Get a journal, any trade you take, write down why you got it, what contract, how much it was, where you sold it at. So as you go, as you continue, you can go back. You can see, all right, I did perfect on this. All right, damn, I shouldn't even bought this one. Make sure you can kind of put yourself back into that same position when you were in the trade and understand your mindset when you were in the trade.
Well, I don't think I can find it, bro. I was trying to do the cup and handle explanation here, but
Oh, and Tessie.
yeah, but I think Tesla ripped too hard for me to explain it. I think it was over here somewhere, and then this is inverted over here. This is an inverted cup and handle. So it goes like this, and then this is the cup. This is the little handle bar, but it's gonna be hard to explain it like that. Hold on.
Anybody got questions for E? He's got a lot of experience, a lot of years into trading. Myself. Got you, Benton.
Yeah, I mean, if anybody wants to come off mute and ask, like, you can ask while I look at this. But other than that, I mean, Nico, I'm probably just gonna hand you back the screen sharing if you want, because I can't really find it. This is the 10-minute. This is still Tesla. Maybe Mara has it. Let me see.
See what's left to run up. The morning stars. So don't forget, guys, the news is what fuels the market. It's what gives it the attention. We see Trump tweet something. If it's positive, more buying. If it's negative, we see selling. So that's what's fueling what's going on in the market. And again, this is Thinkorswim that he is using, that he has the screen up on. So you can either use TradingView or Thinkorswim. When it comes to breakouts, what I would say is about it's easier to capitalize on breakouts versus trying to predict them. So what do I mean? Capitalize on the move that's already occurring or the direction that the stock is already in versus trying to predict the stock to reverse, trying to be the first one in to predict the direction. The success rate on breakouts or trading breakouts compared to trying to trade reversals is much higher on catching the actual move, getting a piece, and then calling it a day.
Alright, let me see if I can do it on this one. Hold on. Studies.
So there we go. trading, you want to keep it simple. Don't overcomplicate it. I know it's easier said than done, but don't try and do too much in the market. Just like we were saying, there's plenty of opportunities as the day goes by. So don't fall in love with the trade where you try and hold on for dear life. Where you're like, no, I'm going to be the first one to hold and the last one to let go too. It doesn't make sense. So make sure you're capitalizing on the breakouts while they're occurring versus selling on the pullback. Any questions, guys? Ben 10, Perp, y'all want to throw in something? While Eve's just pulling this up. It's just on charting.
Nah, so far, I think UAC really did shit, covered everything.
Yeah.
Oh, I got something.
What's up?
Maybe that might be tomorrow, but can you do ascending and descending triangles if you use those?
I myself, well, I just see them when they occur, so I'm not necessarily looking to. So when price is creating an ascending triangle or descending triangle, you'll see the movement. You can go and you'll be able to compare and literally go on, like, I literally go on Google and compare the image of the pattern to see what price could
Excuse
potentially,
me.
what price can potentially do. But I'm not necessarily looking for that specific pattern to choose my entry. If that
Okay.
makes sense.
Yep.
So recognizing what's going on, of course, is needed. So let's say if you're already in the trade, then that'll be important as you're watching price continue to the uptrend or continue that downtrend. And then you see that breakout or you see that breakdown. But I wouldn't say that's going to be I wouldn't say that I would use that for my entries on, let's say if I'm going to get into Tesla or Apple, MSTR.
So
Looking at price action to really understand where price is going and seeing who's in control. You found it?
this, yeah, I mean, this right, I didn't find it, but just based on what he's talking about right now, this would be like an ascending triangle. So you have the top right here, which is the top of the triangle, and then you have
Mhm.
this right here, which will be, you can even put it from, I guess, maybe here. So it would kind of look like this in a way. So you see how right here will be touching, right here will be touching, and then it would just come up here. The only time that it got under the ascending triangle is this candle over here. So this is what the ascending triangle looks like. This right here and this right here. Descending is this pretty much backwards. So
Sending
if you,
bullish. Go ahead.
yeah. So breaks above, then you have a bullish momentum. Breaks under, then you have a bearish momentum. It's almost the same as a bullish and bearish flag. Um, you have a descending triangle. I would say, I think maybe I was looking at GLPI. Yeah, so it would be this one. So you would probably do here you would probably do down here, which is the support. You would just draw a line here. And then you would just draw from, I would say, like here. Yeah, I would probably draw from there. Let's say from like here, like this, like down. I have, I'm not giving this chart because this is like nothing on there. So this chart doesn't have any lead for me to keep drawing on there. But yeah, you would draw this all the way down till it reaches this side. Sometimes it breaks out before that. Sometimes it breaks down. It breaks under this line, but this will be support. You have 1, 2, 3, 4, 5, 6, 7, 8, 9, almost 10 times that it has touched this support. It's only gone under this time. It had earnings here, another one here, and another one here. So, but yeah, this would be the, that would be like what the descending triangle looks like. So above this, so if you get another candle somewhere around here somewhere that goes above this line, then you have you have bullish momentum. If it breaks under this line, then you have a bearish momentum. So these are very similar to like a wedge up and a wedge down, or just a wedge. So you
And
have,
then
good.
and then I guess pairing that with what Nico said earlier about the candle. So if it breaks below that support there on the descending triangle, I'm looking
Hmm.
for like big red candles to show that it's a real move down.
Correct. Yeah.
I'm not looking for like one wick below and then it goes back up.
No, I mean, you have the example right here. You see, 1 wick below, and then it went back up pretty high.
Okay.
Then you have the other stuff that's kind of similar, which you have a wedge up. This is a wedge up. Uh, you have this like this pretty much,
Nasty word.
right? So this will be like that. Then you have, I would say a wedge down, probably somewhere like over here. This one's a little wanky because, and this stock is like below as well. So you have something like this. It only broke up a couple times. Can
Okay.
draw it better. It's just as an example. So you see you have a wedge down, up, and then wedge up, down.
Got it. Thank you.
No problem. And the same way you have like I would say this is somewhat of a wedge as well. Just a regular wedge, pretty much. This right here, just price. Somewhat, not really, because this one has a big gap over here.
Yeah.
Yeah. So I would just probably just stick to the descendant triangle on that part right there. That's what I would do. But that's usually how they work. Like for example, if I go to SPY right now, look at this. This is pretty insane, right? So you can either do this over here, just a wedge up, you know, right here, and then you have this one over here, but we're still going up. We've only broken structure one time, which is this right here, and we never closed this. We never closed this gap either. I don't think. We have a gap here, from here to here. This is a gap right here. So this is what, $8 gap on SPY. Did we close this? I don't think we closed this, right? This is SPY. This is 639, but this is before. And then you have all the other gaps have been filled pretty much. This is the only one that hasn't been filled up here. This one to here. So right there you have it's only a $4 gap. But yeah, I'm kind of surprised all the other gaps have been filled. That's pretty bullish, I would say.
Monday
And
might
then,
be fun.
yeah, and then this one here, let me see. Alright, so this is daily. You have another, I mean, yeah, this could go crazy. Unless we follow this pattern here. Monday could be open up high, like which is kind of like a nice green candle, and then close low. And then the next day would be, but then the next day, what do we have? We have something on Tuesday reporting, right? Was it PCI
Or
or CPI?
I think it's CPI.
CPI? Yeah, I mean, yeah, just gotta see what happens.
The news helps the movement, gives it the reason to push higher or lower. Any questions, guys? Probably any And
Any other questions at all, like as far as chart wise, I'll take. You guys know what a double top is? Channel up, channel down, multiple tops, head and shoulders. Do you guys know what a head and shoulders is?
What's channel up and channel down?
So basically, same thing as right here, channel up. So you have, it's pretty much the same thing that we were just talking about. They're just like fancier words. So channel up,
stayed within that range,
channel down.
gradually going up.
Very simple.
Thank you.
So yeah, ask your questions, guys. We don't mind answering.
Channel up, pretty much. I mean, on this one, you can pretty much, the whole thing is just channels up.
Channel ups.
And then you have just sideways action here. This is like kind of like a box.
It would
Weird.
be higher highs, higher lows. The channel would be forming as you're getting higher highs and higher lows.
You guys understand it, right? Or no?
Can you put in layman's terms what higher highs and lower lows mean?
Repeat that again.
Can you explain like what higher highs are and lower lows?
Higher highs and higher lows. I have a rough time explaining it due to
Got it.
the dual language, but yeah, Niiko
Okay.
can probably do it.
You want it?
Yeah, you can do it. You can do it.
All right, let me pull up. I'm gonna steal a chart real quick. All right, so let me pull it up. Actually, let me find.
You gotta, the best way that I can explain it, just while he's doing that, is every time that you, basically every time that you have any type of momentum as far as the breakout towards the upside, and it holds, the move, that would be considered a higher high. That's how a higher high is made. So if you go, let's say you have a move down and it holds that move down, then that's how you do a lower low. It's, let me see if I can, I know Nico's gonna look it up, but I'm gonna see if I can find something for you guys here. It's just the simplest way, because some people try to explain it and they overcomplicate it. But let me see here.
So
Man,
price is starting to move up, for example, right? Price is starting to move up, right? We'll consider this. So price came up, then came down. We got a high, and then we got a low, right? Price continued to go up. It reached higher than this high, right? So a higher high. And our low, which was over here, is a higher low. It's
Got it.
higher than this low. Does everyone see it? Does that make sense?
Got it. Okay.
So price
Yeah.
started here, grinded up. So we got a high all the way up here. It came down. This is our first low. Now our new high is over here. It's above this high. And our low, so when price came back down, it reached right here. But it's above this low that occurred over here. So price continued to gradually go up. As price continues to go up, we got our uptrend. Does that make a little more sense, guys?
So basically what Alex said too in the chat. That's the easiest way to explain it.
Older resistances now support. Perfect.
Is everybody in here inside the Discord?
Everyone, yes, just about. If not, someone may have said, told them to send the Zoom link, so, but everyone should be in there. Any questions, guys?
So they have access to the general chat, right? Alright.
No, right at it. If you gotta put something, put it in the lounge at the very top. The TOA
The free lounge chat. Alright.
lounge. about to post something?
Yeah, there you go. Best way to explain it.
Higher highs and higher lows. Here's the example as well. So the left side, we got our higher highs. And then right side, lower lows. So our downtrend continues our downtrend. And then our, on the left side, continues our uptrend.
So what Alex is saying, basically, if it's going up, now resistance became support. If it's going down, now basically support became resistance. So it flips.
Save this, save this. Any questions, guys?
Good stuff, Alex.
Everyone good for today's session? Y'all fell asleep on us?
Ben 10, your high is getting higher and the low is getting higher. Ah,
Alright, I'm gonna call it here. Horrible advice. Y'all have a wonderful night. Last class tomorrow. We're gonna finish it off, end it off right. And then Monday we got the market and definitely about to kill the market this week. But y'all have a wonderful night.
You're
you're-
nice.
Here.
Bless.
Here.
Good night, guys.